Welcome to the interview segment of Let's Talk Stocks. I am Fitzroy Prendergast, and today we have a very interesting personality with us. We have the Chief Regulatory Officer of the Jamaica Stock Exchange Group, Andre Tulloch. Andre, welcome.
Hi, thank you. Thank you, Fitzroy, for having me.
We have always heard this term, RMOD. What is RMOD?
Well, the RMOD stands for the Regulator and Market Oversight Division of the Jamaica Stock Exchange. And it's the division that carries out the day-to-day surveillance and compliance monitoring of activities on the Jamaica Stock Exchange. And we report to the Regulatory and Market Oversight Committee, which has the overarching power to decide on all regulatory matters of the exchange. So what we do in terms of at the Regulatory and Market Oversight Division, we carry out surveillance and compliance functions, which we broadly categorize as listed company compliance, member dealer regulations, market surveillance, enforcement, dispute resolution and arbitrations, risk assessment, as well as rule development.
Wow.
So all of those activities, the discharging of all of those activities are done with the ultimate objectives to promote and foster transparency and market confidence.
Excellent. So the RMOC is the one that makes the decisions.
Exactly.
And so their role and function is much more broad than the RMOD. Am I accurate in saying that?
No. Well, let me explain. So we are really the administrative arm of the Regulator and Market Oversight Committee. So through the board resolution of in 2008, the JC board delegated its regulatory powers to an independent committee, and it's important to stress on that, an independent committee that consists solely of independent directors of the Jamaica Stock Exchange to handle regulatory matters. And this was done to reduce the potential of a conflict of interest and to strengthen the JSC's regulatory framework, so to speak. So the RMOC now has the broad powers to discipline member dealers, make and interpret rules, assess complaints. And what we do is, as the operational arm, we carry out the daily activities and report to the Regulatory and Market Oversight Committee frequently. So we report on a monthly basis, and from time to time we will have special meetings to look at issues that are of critical importance to the market.
Excellent. Now, how do you think communications and investor relations strengthens the market? Because it's important to have a level of interaction that is consistent. What do you say about the communication factor and investor relations in terms of broadening and strengthening the market?
No, it's absolutely critical, and you just said it there, Fitzroy. It's important for companies to have that engagement with all stakeholders, investors, shareholders, and the strength of your communication and investor relations redounds to it aids in instilling trust and confidence from those very stakeholders who you report to. So companies need to look at this critically, design their operations to ensure that they can effectively carry out this function. Because one, if you are able to effect communication in such a way where you inspire trust, you will be able to get certain feedback from your investors. You will be able to get buy-in from your investors as it relates to critical decisions that you hope to make. And for instance now, how else would you be able to understand your investors, your stakeholders' expectations, and let them know that, hey, we understand this, and this is what we have done to meet those expectations.
Do you find that companies who invest in communications and investor relationships tend to do a lot better?
Definitely, 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 because it's that trust, you know. If your stakeholders and investors have, based on the level of communication, based on the level of investor relation, trust your operation, trust that there's good governance, trust that, hey, this company is known for doing the right thing, and this company communicates to me, informs me in terms of what is going on. It puts investors in a better position to make decisions and can assess the value of the company. So from that standpoint, I believe companies who are very effective at this, oftentimes it is reflective in their share price.
Exactly. I was just about to say that.
And the inverse as well.
And when I look at the awards that the stock exchange does every year, and you see the companies who, do very well, you look at their share prices, it reflects that the company is doing well because the investor relations and other components are coming together.
Yes, exactly. And, it's important. So that's the good side. It's important to even look at the negative examples, We see where from those examples that when you are not doing that, it impacts on your reputation, it impacts on your stock price. It can go as far as impacting on the sustainability of your business operations.
As the group, as the head of regulatory arm of the stock exchange, how do you get smaller companies, maybe on the junior market, to get stuck into the idea of constantly communicating? Some folks may be afraid that they don't want to communicate negative information, and so they may be coy as to how they do it. But how do you get them to understand the importance of this?
No, thank you for that question, because the rules are structured in such a way to foster strong best practices in corporate governance and effective communication and investor relations. For example, the rule speaks to timely disclosures, and it gives clear examples in terms of, what companies should be disclosing, what type of examples of material development should be disclosed. For instance, also just a real example. The rule even speaks to how you engage your stakeholders when there are going to be delays in filing your financial statement. It speaks to the fact that you should issue a notice to the market that reminds or advises of the extent of the delay and the reason for the delay. And we at the stock exchange, we carry out our surveillance and enforcement in keeping with the rules, and that's the strong side of it. But we also engage our listed companies, our member dealers, frequently. We engage them through reminders in terms of their obligation, reminders as to due date, and even with situations where there are delays, we remind that, hey, you have to communicate to the market in keeping with the rules. And a perfect example of this was even the last reporting period in respect to audited financial statements. Those companies who were late, who had delays, without fail, based on the level of engagement, they would have reported and notified the market of the delay and the reason for the delay. So investors have this bit of information, and I don't believe it is a fair reflection to say there's no information, because this is information that is out there that investors can use to say, hey, should I make a decision about this company in terms of, how I trade? Now, the rules give the rule. The companies can do more in terms of investor relation because yes, there is a delay, but you can also further communicate to your stakeholders.
So what you're saying is that you can do more than what the stock exchange asks you for.
Right.
While the stock exchange gives you a basis of what the information is required, you as the company X or company Y, can take the initiative to reach out to your investor and let them feel a part of the company by giving them the necessary information.
And let them not be worried. You can say that there's no need to worry. This is the reason. I mean, yes, you would have communicated and satisfied the rule, but there's more you could do. You have social media. You could accept real-time feedback from your stakeholders and provide comments to them on the matter. There are just various channels. So the essence of the point is effective investor relations involve utilizing all means that you can, to communicate with your stakeholders and get their feedback. And companies can go down that road as well.
Let me ask you this. Do you have like a general time frame where like financial statements are supposed to be submitted to the stock exchange for those persons who are listed on the market? Is there a deadline, like a broad overview
Definitely.
of what it is that is required, when it's required, etc., etc.?
Definitely, and that's critical for an orderly market. So the rule does lay out the timeline for filing quarterly financial statements, which is within 45 days from the end of the quarter. Audited, it is within 60 days or 90 days, depending on the fourth quarter option that the company would have opted for. So the market, in knowing that information, because all the rule is structured, from you have selected a fourth quarter option and it becomes practice. Persons now begin to expect that, hey, this is how you file your return. And the only time you really need to advise the market again about your fourth quarter is if there is a change. And the rules provide a clear guideline for that sort of interaction in terms of when you should be providing this advice to the market, because you can't just get up and change your fourth quarter option when this is expected, right?
Let me ask you another question. For lay persons who invest in companies, is it protocol to say to those folks, when you are not getting information in a timely manner, you need to be a little bit, probably you need to have a wait and see approach just to make sure that you're doing the right thing? How do you think that the investor on the other end of the spectrum should treat with the tardiness, if that is the case, of some companies who don't give over the information as required to the stock exchange on time, or there are delays that are not communicated in a timely fashion? How do you think the regular layman on the road should treat with that? Because it's their investment. It's what their families know, that they have spent money investing in company X or what. So they are very serious about their bottom line. How do you think they should deal with things like that?
Well, and that's an important question, because first and foremost, I would always say that the obligation is on the listed company. You came to market, you would have, based on what you would have presented to investors, they would have trusted you and invested in your company. So you ought to do the right thing, and you ought to open those channels where investors now who are disgruntled, let's say you are late, and investors are disgruntled, they can lodge those sort of complaints directly to the company as well. Nothing is wrong with reporting this matter to us, because we encourage investor activism as well, and the stock exchange. How
do you encourage that?
No, we encourage it in terms of the avenues that we have also created for investors to communicate to us. So we have on our website a suggestion box where you don't have to give your name. You can file your complaints. You don't have to give your name. You can lodge a concern. You don't have to give your name. You know, and persons do file to us to say,
And you
hey,
track it down.
and we track it down and we make contact with the company. And that's part of our engagement with our stakeholders, because when we get these concerns, you know, we review all concerns and try to treat with them. And we engage the company on the concerns, right? So they know about it. So that's one avenue. But I'm saying that companies can create those channels as well and let their investors know that, hey, you can come to us as well.
Final question. It seems to me that the workload is a lot for the RMOD. There's things happening all the time. As the market expands, there are more companies being listed on the market. There are more requirements from the folks who want information on the various companies that they have invested in. Do you see yourself reaching out to companies to say, hey, as we expand this market, you need to comply?
Well, I would say, let me answer it this way. The Regulatory and Market Oversight Division, the Jamaica Stock Exchange, we are always in constant dialogue with all our stakeholders. And since the inception of the Regulatory and Market Oversight Division, if you check the records, the level of compliance has increased. No doubt about that. But from time to time, you know, you will have issues. I mean, I can share this with you. The said issue in terms of audited financial statements. I read an article just recently. The US SEC is having a similar challenge. You know, a similar challenge in terms of delays in filing of financial statements. So it's not a situation in terms of the strength of the regulatory framework, because when you look at the US SEC, sometimes they have some of the most significant fines for failures. Yeah. And we have seen them, you know, but yet still these issues occur. So what it means is, as a stock exchange, when we observe an issue, we have to carry out the proper analysis and engage the key stakeholders about the issues, so that we can come to can have some recommendation in terms of treating with those issues for the best interest of the market and to safeguard and preserve market confidence.
I did say final question, but one popped out as you spoke. So now that you think that we will be, the stock exchange will be, the regulator will now be reaching out to the key stakeholders to discuss and to dialogue and to see how there can be improvement in terms of compliance. I think we will see a situation where many of your key stakeholders, they're having challenges. Sometimes the chain coming to you and the auditors and other persons who are doing these financial statements may be under pressure. There may be challenges and so on and so on. You are going to be seeking their cooperation. How effective you think that will be in terms of, really tamping down some of these concerns by folks?
No, it's always effective. Engagement is always effective. We have bright minds in Jamaica, and when you bring them to the table and say, hey, this is a concern, we need to address it for the interest of the market. Audited financial statements are very important. It's important for the credibility and integrity of the market. And bringing in the key stakeholders in the room, say that this is a challenge, how do we treat with it? There are many, given the bright minds that exist, there are many recommendations that I'm sure will be put forward. We also at the Jamaica Stock Exchange, we are constantly doing our own analysis and our own review of situations. So the question will always be, should we, review the rules for this particular issue? Should we now be thinking about raising the level of penalty? Well, we have seen with the case with the US that possibly that won't work. Should we now incorporate in the rules more accountability in respect to the people who are actually involved in preparing audited financial statements? Should this chief financial officer be named? Should the person who works for the audit firm, the audit lead, be named? When there's a delay, should the audit firm be named? So those sort of things are recommendations that we can consider. But at the end of the day, when
you don't want to be too draconian.
Exactly.
Excellent. Thank you, Andre. That's it for interview with Andre Tulloch, the Chief Regulatory Officer of the Jamaica Stock Exchange Group. Join us next time on Let's Talk Stocks for another very interesting interview. I'm Fitzroy Prendergast.